But Pankaj, good having you. Thanks for taking the time out. So good talking to you again. But Pankaj, just very interesting. You know, we were covering the JP Morgan Investor Conference yesterday, Pankaj, and the insights that came in was that let's not be very scared of 23, 24 PE multiples. And it kind of coincided with what I remember you told me. Okay, Neeraj, this is a bull market. Don't think so much because bull markets do their own thing.
Absolutely, Neeraj. Good morning to you and all your viewers. Always a pleasure talking to you. I've been holding this view, Neeraj, that India is, from a global context, an outlier economy, and there's a bull market in equities globally and in India. And currently, given the backdrop that growth in India is reasonably strong, and more importantly, now we've gotten to a rate easing cycle globally with Fed, and now we've seen some stimulus coming from very strong stimulus coming from Chinese central bank as well yesterday. I think equities are poised for a melt up. The whole macro backdrop last 18 or 24 months has been that equities have been in a Goldilocks kind of environment. And I think looks like the backdrop is clearly set for a melt up in equities, which effectively means that uh, uh, we have significant liquidity now coming into emerging markets, and India will be a significant beneficiary of that because last time during COVID, when rates were benign, India's weightage in MSCI emerging markets was 8%. And this time around, when we're going through a benign interest rate cycle, India's weight in MSCI EM is 20%. So effectively, for every $100 coming into emerging markets, India will get a much more higher share at 20% than what we got last time, which effectively means I think flows will accelerate. And all of that will effectively mean that valuations will go higher. So I think we should not focus too much on PEs. And I think probably this is the new normal for India, given the fact that India is an outlier growth economy.
Pankaj, hi, good morning. So we are hoping your, your esteemed presence will augur well for the Nifty today as well, since you are our fellow cheerleader whenever the markets are hitting new highs. So that's definitely exciting. You answer the valuation question. Let me come to you on the pockets of excitement that you see. Are you as bullish on private banks making a comeback as some people on the street seem to be? With an HDFC, ICICI Bank, etc. on focus, the idea seems to be that they've been punished enough and left out enough.
Absolutely, Tamanna. I'm completely in sync with that. I think we will see a rotation back into private banks. They've underperformed for the last 18 months. Probably there was a pressure on margins to some extent because of higher deposit rates, but probably some point of time, probably if not by the end of this calendar year, early into the next year, India will certainly get its own rate cut cycle. I expect we should see at least 125 basis points of rate cuts in India as well, because we probably have one of the highest real rates in the world. And with that, probably growth should also accelerate for banks from a loan growth perspective from here on. And because banks have underperformed in the last 18 months, valuation in the sector are far more reasonable versus a lot of other pockets of the markets. So I see a very strong sectoral rotation going back into private sector banks. And HDFC Bank is one of the, which has been one of the big laggards. That's primarily because they've gone through a massive M&A and probably are in the consolidation phase post that M&A. But I think HDFC Bank will start participating from here on because I think the worst of headwinds are clearly behind them. Directionally, things are going right for the merged entity. So, and we'll see acceleration in growth from HDFC Bank as well, probably in the second half of the year. So I certainly see private sector banks. Actually, I'm of the opinion that from here on, as market rallies, private sector banks will take the lead versus capital goods.
Pankaj, ICICI, HDFC, Axis, rank in order of preference.
Well, I can say what we own in larger private sector banks. So clearly, HDFC Bank is clearly the preferred one because valuations there are far more comforting than some of the other peer private sector banks. So clearly, HDFC Bank is really the top of the pack. Amongst the others, what we really own is ICICI Bank and Kotak Bank. We think Kotak Bank itself also has gone through a massive consolidation over the last 4 years. And we think probably from second half of this year onwards, probably the margin pressures will be behind them. And growth has already started accelerating. So we're expecting much better numbers from Kotak Bank from a aggregate profit growth perspective from second half onwards. And more importantly, it's a very solid franchise, not only across lending, but other pockets of segments of the capital markets as well. So our preference is for Kotak Bank over Axis Bank, if you really ask me. And Kotak, ICICI are the other two other than HDFC Bank that we really own.
Pankaj, can't not ask you about metals really, because the opinion that I get is split right down the middle. Some people say that this is the Indian version of the TARP, and this will have a lasting impact on maybe Chinese economy and thereby metal fortunes as well. A lot of others say that yes, there is a small rally that has happened, but more needs to happen for people to be constructive on metals for longer. What is your thought?
Well, Neeraj, as far as China is concerned, I believe the whatever stimulus we've seen yesterday is too little and a bit too late. So clearly, there's more coming in China, and the government will have to do much more. Unfortunately, it should have happened much earlier. Unfortunately, China is following the playbook of Japan. When Japan entered into a severe slowdown in the economy, I wish this some point of time they change the course. We really have to see how they behave. Otherwise, Japan, from whatever we've seen of the Chinese government over the last 15 or 18 months, they're clearly going the Japan way, which is clearly not encouraging. So I think there's more coming on China. But more importantly, I think there's a very massive consolidation that's likely to happen in manufacturing capacities in metal sectors in China, because today 80% of Chinese steel mills are losing money. And Chinese government is out there publicly encouraging companies for consolidation, and they really want that top 10 Chinese manufacturers should control almost like 60% of the industry. So I think we'll see a very massive consolidation in Chinese steel mill capacity over the next 12 or 18 months. And something similar is happening across some of the other commodities as well. And which bodes really well for global metal prices, because clearly the world is seeing the spillover effect of sharp slowdown in the Chinese consumption, where China has turned a major exporter in some of these commodities. So as far as India is concerned, I think at some point of time, the government will step in terms of imposing some sort of a minimum import price or something on imports from China. And I still remain positively disposed to Indian metal names. Probably they've corrected fair bit. And I think from here on, we see from a slightly more medium-term perspective, given the fact that we have strong growth tailwinds in terms of volumes for metal companies in India, we would be positively disposed on some of the metal names.
Positive on some of the metal names, definitely. Let's see some of the other movers this morning in trade. Let's pull up Delta Corp and see what's happening there. Remember, they've announced a demerger of their hospitality and realty businesses into another listed entity. Stock up 8.5%. 1:1 is the share allocation for current investors in the new demerged entity, and Delta Corp doing well this morning. Easy Trip not so much. Promoter wants to sell stake, and the street not taking to it too kindly. Those are some of the movers. MCX on the fee revision doing okay. Whole host of auto names also suffering a little bit, maybe cooling off after the kind of run up we've seen. So that can really be put down to that as well. But Pankaj, just coming to you on the whole auto move, and the next question will be on Hyundai IPO, but let's just talk about autos right now. Two-wheelers versus four-wheelers, what you're liking and what your favorites are here. I think the feed is getting a little glitchy. Pankaj, can you hear me?
Yeah, I can hear you now.
Okay. Did you hear my question? All right, let me repeat it for you. I was asking you about what you like in autos.
Well, we've been holders of Tata Motors for a long while. So that's the one we like, because we think obviously all of us have seen there's a very sharp turnaround in JLR, and the kind of cash flows that JLR is going to probably throw or generate is going to be very, very significant from a Tata Motors perspective, generating probably £1 billion of cash flows, free cash flows. And Tata Motors probably by the end of next year, in about 18 months from now, will be a company which will be completely debt free. And we clearly like their leadership in electric passenger cars in India, because we think we'll see acceleration in adoption of EVs in India in the passenger vehicles over the next 5 years, and clearly their dominance really excites us. So that's the one we've been owning. Other pockets of the market, my views are fairly priced in that sense.
Okay. Pankaj, if the moves on the INR have to be a bit more calibrated than the past 4% average depreciation that we've seen in the rupee. How does that augur for Indian IT services, if you believe that has any bearing at all? Separately, the internet businesses have done a remarkable run until now. Are you tempering your optimism, or for the short term, I mean? I know you're constructive long term there. So two questions rolled into one.
So, Neeraj, on the internet business, very simple. Neeraj, I've always said that I'm a perma bull on all internet businesses. I don't even want to think short term on those businesses. The simple idea is one should buy some of those companies in that segment and probably just forget about them for the next 5, 10 years. As long as those companies are doing okay, don't even bother about valuations. Remember, at the peak of TMT bubble way back in 2000, we had some of the IT companies trading at 100 plus multiples. So if the growth is going to be very strong in internet business, which it will be, then there's no reason why these companies will keep trading at very rich multiples in that sense. So I think one should not, meaning even think about those companies as long as directionally those companies are doing fine. IT, Neeraj, I have a view which is slightly more on IT services, which is slightly more different from the street. I'm slightly more optimistic on IT services company. It's clearly evident now from what we've seen in the last quarter and what my conversation with companies during the last few months after the first quarter results has been, that clearly the worst is behind. All the companies are clearly calling that out, that the worst is behind for them in terms of business. But it's still early days to see a very strong revival. But my view is that probably once we pass through the US elections, probably next year onwards, we'll see a strong revival in IT spending, and probably it will be a slightly gradual pickup. But I think from second half of next year, we'll see strong revival in tech spends globally, because global companies or Fortune 2000 companies have been holding back tech spends for a very long period of time, almost now about 8 or 10 quarters. And I think those tech spends will come back with a resurgence. So, from a slightly more medium-term perspective, I'm slightly more optimistic or positive on IT than what the consensus on the street is. And I think these companies will surprise us on upside in terms of their growth, not immediately in the next 2 quarters, but certainly after that. So in that sense, I'm a slightly more positive bias on IT, and it's been my view that probably the this spending cycle in IT, and we're seeing it's still early days, but as probably as things pick up, probably will be driven or led by AI-driven projects and AI implementation. And it's my considered view that probably this will be the biggest IT spend cycle that we'll see over the next 5 years. And in this cycle will be bigger than the biggest cycle so far we have seen in IT is the internet cycle in the mid and the late 90s. And probably this cycle could be bigger than the internet cycle. So we are on a cusp of a very long drawn and a very significant spend cycle in IT is what my hypothesis is when I look at the sector from a next 5 years perspective.
So you're bullish on IT. Are you excited about all the IPO rush, Pankaj? I'm wondering, are you in the camp who's a little concerned with SME IPO valuations on one end and the slew of IPOs coming, or are these real opportunities for investors?
So as far as SME IPOs are concerned, I must confess I have no clue because we don't even look at them. They don't fall under our radar. Those are very small companies or micro caps. So clearly I have no clue, but I've been reading I've been watching news channels and reading some frenzy going on there, and it clearly looks like a big frenzy out there. So one should be slightly more careful in terms of indulging in those IPOs and so on and so forth. Generally, we are not a big fan of IPOs because my experience when companies do IPOs are more than fairly priced. They're not leaving much on the table in that sense, and you get very little allocation because they are so oversubscribed. And more importantly, as investors, given the fact that we are slightly more long-term in our approach, we like to invest in companies whom we've companies with which we have a track record of performance, because IPOs are new companies. You don't have much of history with those companies. So we are slightly conservative in that sense in terms of our approach to IPOs. And the point is, meaning we have had some of these great companies like Bajaj Housing, and probably Ola Electric has a lot of potential. I'm very excited about Ola in terms of what they can execute and they can really achieve in terms of disrupting India's two-wheeler market. So some of these companies hold a lot of promise, but I think for a value investor like us, we will probably wait for a more opportune time to invest into some of these names.
Okay, so we are excited about IPOs, some of the big ones coming. Which ones are you looking most forward to, Pankaj? A Hyundai, a Swiggy. You know, it's exciting because these are mass consumer names as well. But it's not necessary. That's where the value lies.
Absolutely, you're absolutely right, Tavanya. But I think it's very good that we have some of these large companies coming and absorbing large pool of capital. Given the kind of flows that are coming to equity markets, we want large businesses which are very strong or amongst the leaders in their respective industry to come probably get listed so that one investors can participate into the growth, because eventually these companies' growth is driven by Indian economy. So as investors would like to participate into every segment of growth of the Indian economy through capital markets. So it's very good that these companies are coming and getting listed from being private, just being in private domain, so that investors get to participate in their growth. And secondly, given these are large companies, they have very good governance, established governance, boards, and probably good governance practice. We need these kind of companies to come and absorb large amount of liquidity that's really flowing into the market. So probably I think it's a great thing for India to happen, where I think we need many such large companies, because India still has a lot of large businesses across industries which are still in private domain. And it will be great if all of those businesses at some point of time do get listed. I'm sure markets are very excitedly looking to, let's say, a listing of a national stock exchange, which is now, I think, the third most profitable company in corporate India, and which is still unlisted. And there are many such other companies which are pretty significant in terms of their size and scale and still in private domain. So it will be a great thing for us as investors to have all of these companies listed on the bourses.
Pankaj, but the subscription fervor. I mean, yesterday or day before, right? Monday, there were 2 companies getting listed which were subscribed 100 times. Yesterday on day 2, there's this business, Manba Finance, which is subscribed 73 times on day 2 itself. This subscription fervor, where is that emanating from? It's not as if a lot of these businesses are priced dirt cheap, right? So where does this come from?
Neeraj, we are in bull markets. Early days of my career, I've seen where we used to make physical application for IPOs. The IPO forms were sold at a price because it was difficult at times for some of the fancied IPOs to lay your hand on a physical form of IPO so that you can apply for IPO. So you had to pay for getting access to that form so that you can even apply for IPO. Thank God it's all digital these days. So you're at least not paying for applying. So I think it's a bull market. We should. I'm saying all of these frenzies are very normal in a bull market. Meaning, it's always been my view that it's the business of markets to create bubbles and burst bubbles, because crowd behavior is never rational. So if markets are creating bubbles, they're doing their jobs. Stock markets do create, bubbles, and eventually it's a self-fulfilling cycle where they by their own mechanism burst those bubbles as well. We are in an environment where we are clearly in an environment where there's a melt up on equities globally, and India actually is the most expensive and the hottest market in the world. Everyone in the world wants to invest into India, and obviously there is a large pool of money which I understand from my conversation with global investors is waiting to come to India. So, if at all anything, my view is that valuations in India will only get expensive. These markets will only get hotter before we finally, before we see the peak of this bull market.
All right, thank you so much for speaking with us, Pankaj Murarka there. And the peak of the bull market is perhaps yet to come. The kind of faith that companies are showing in the Indian investors and Indian investors showing in companies, actually more like it, is also important.